Hey there! You've probably heard terms like stocks, shares, or the stock market floating around. But what do they actually mean? And how do they work? Let's start simple. A stock represents ownership in a company. When you buy a stock, you own a small part of that business. For example, if you owned 50% of YouTube stock, you'd literally own half of YouTube. A share is just one unit of that ownership. So if a company is divided into 10 shares and you own 5, you own 50% of the company. Now, where do you buy and sell stocks? That happens on a stock exchange. Places like the New York Stock Exchange or the NASDAQ. Why do companies sell stocks? Well, companies need money to grow, launch products, or even just stay afloat. Instead of taking out a loan, they sell pieces of their business, called shares, to investors in exchange for cash. Those investors become part owners. Let's make it clearer with a story. Meet Bob from Bob's Burgers. Bob is passionate about flipping burgers and running his family restaurant. But now he wants to expand Bob's Burgers into a bigger, flashier location. After crunching the numbers, Bob figures he needs $100,000 to make it happen. But he only has $50,000. Bob decides to raise the remaining $50,000 by bringing in investors. He divides his business into 10 shares, each worth $10,000. He keeps 5 shares for himself, worth $50,000, and sells the remaining 5 to investors. Enter Linda, a burger lover who believes in Bob's dream. She buys 1 share for $10,000. That makes her a 10% owner of Bob's Burgers and entitled to 10% of the profits. Bob finds 4 more investors, sells all 5 shares, and boom, he now has the full $100,000 to grow his burger empire.
One eternity later.
Bob's Burgers becomes a massive hit. He opens new branches and the business grows in value to $300,000. Linda, who still owns 10%, now has a share worth $30,000. If she decides to sell, she'll walk away with a $20,000 profit. Not bad for someone who believed in burgers early on. But what if things didn't go so well? Let's say Bob's Burgers struggled with competition and its value dropped to $80,000. Linda's 10% share would now be worth just $8,000, meaning she lost $2,000. And that's how stock investing works. Your return depends on how the business performs. Taking Bob's Burgers public. If Bob's Burgers keeps growing, Bob might eventually go public, meaning he lists the company on a stock exchange, like NASDAQ or NYSE. This allows anyone to buy or sell shares in the business, not just private investors. Why do people invest in stocks? Because they believe the company will grow, increasing the value of their shares. That means they can later sell them for a profit. Sometimes companies also pay dividends. These are like bonus payments from profits, shared with shareholders. But hold on, there's a catch. The stock market doesn't always go up. Companies can underperform. The economy can dip. Bad news can tank a stock's value overnight. So yes, investing in stocks can make you money, but it can also lose you money. Don't put all your money into one company. Diversify your investments. Don't rush. Learn first. Investing blindly is like gambling with your savings. Also, understand the difference between investing, that long-term growth, and trading, that short-term profit. I'll cover that in another video. If you'd like more simple explanations about money, investing, and the economy, make sure to like and subscribe. Thanks for watching, and hey, maybe go grab a burger.